Hi there, good morning. You're watching Market Cafe on ET Now with me, Snehi Shah. With me is Vinny Motiwala. And Vinny, the color that's missing from our Indian flag today, the GIF Nifty is completing that for us. Because take a look at that. She's orange and blue and the GIF Nifty is green.
We have the green cup, green and white cup.
We do have the green cup as well. Well, yes, everything is lining up pretty well along the theme of independence today. And on that note, let's just kickstart the show with what the global handover will look like. And Vinny, some stellar recovery being seen across the US markets. They were green too.
Absolutely, they are green too. So yes, we have that green coming in because Dow Jones, S&P 500, Nasdaq, all of them managed to close with very strong gains that we're seeing. Dow Jones up almost 1%, that it closed higher. S&P 500 more than 1.5%. While in terms of the Nasdaq, that closed with gains of more than 2%. So still an up move that we've seen on the global data front or the US market front. And now obviously this is near a 2-week high that we're seeing for the Wall Street, where mainly the reason was the producer price data that came in. That reinforced bets that there will be an interest rate cut. It was not as bad as one was expecting. It was better than what the street estimated, and that is why we're keeping an eye out on the US markets. The PPI number was indicating that it is, in terms of inflation, restricting the inflation from going higher up. Surely the Fed has managed to get that to the level that they were looking at. US price, producer price increased less than expected in this month of July. The cost services fell by almost in 1.5 years. So that's a very interesting data point that's coming from the US point of view. As of now, let's look at what's happening in terms of the stock futures as well. Slightly unchanged is what the stock futures have remained at. So we'll be keeping an eye out on that. Now, obviously, Dow, that rose more than 400 points, almost 1%. It was an interesting move that came in for Dow Jones. A lot of Nasdaq companies surely is something that we are watching out for. Whether you look at something like an Alphabet, that was a bit under pressure only because of we were seeing some news flows that came in over there in terms of the antitrust case. So that is why there was pressure on Alphabet. But after that, other companies are in the Nasdaq have managed to see a very good gain. So yes, keeping an eye out on the US markets. European markets, where did they close as well? They do close before the US markets too. European markets, not a bad handover coming in there. They too ended up higher. DAX was up 0.5%. FTSE was up almost 0.3% in trade. So yes, keeping an eye out on that. All in all, a good handover coming in from the global markets. And Snehi, yes, keeping an eye out on the Nifty implied open. 0.3% of uptake already that we're seeing this morning.
Absolutely, looking rather good for us this morning. Let's take a look at what oil, crude and gold are also up to. And oil yesterday inched 2% lower, but managed to stage a decent recovery because you have WTI that is trading at 0.7% again at 78.8. So still slightly under that $80 per barrel mark. Remember, yesterday at this time it got really close to touching 80, but well, it has receded slightly from that mark. Brent crude also at 81.14, so above that $81 per mark, $80 per mark as of now. And Brent also trading with an uptick of 0.6%. Let's understand what first led to this fall and then what led to the recovery as well. Remember, over the last 2 trading sessions, we've heard news coming in from the slowdown in demand that agencies are spotting in China. They believe that China's post-pandemic rebound has run its course, and this is according to the IEA. Now, global demand in the second quarter increased at its lowest pace, which was 710 barrels per day since the end of 2022, and this is according to the IEA as well. Remember, we also had an OPEC cut coming in on Monday. They've lowered their demand forecast by 135,000 barrels per day this year, citing this softness that is visible in China. Now, the IEA also forecasting a crude oil surplus in 2025, even if the OPEC keeps production cuts in place, and this is due to the surplus output in Brazil, Canada, Guyana, as well as the US. So, lots of factors into play here as well, but we still haven't spoken about the geopolitical factor because that keeps looming. You have tensions between Iran and other countries around it still looming at large. So, that overhang from oil is still not completely gone. Now, US crude rallied more than 4% in the previous session as Israel braced for an expected attack from Iran, and the Pentagon accelerated the deployment of a carrier strike group to defend its ally. So lots happening on that front as well. You have agencies coming into play, data coming into play, demand supply factors coming into play, and then you also have geopolitics that comes into play when it comes to oil. So largely this is what is going on with the crude oil prices, which is why we're seeing some volatility on an intraday basis too when it comes to oil prices. But with that, let's also take a look at what gold is up to. And gold 0.1% higher, and this is firming as the dollar and the yield slip after the U.S. PPI data that was out. Gold as of now at $2,511 per ounce, above that 2,500 mark for now. Let's see if this can sustain going ahead as well. Silver also doing pretty well, almost a 1% uptick coming in. Copper to 0.5% rise coming in on that front as well. So metals as of now looking good. And we did speak about bonds, so let's take a look what's happening there. Treasury yields have slid down as producer prices increased less than expected. So positive momentum being seen on the street. So flip side, bonds are slightly lower. 3.852 is where the US 10-year is at as of now. And lastly, quickly marking cryptocurrency, Bitcoin up 3% and Ether also up 2%. Bitcoin at 67.35, so above 60,000 for now. But let's see if it can hold those levels, Vinny.
Absolutely, but a lot of interesting events that we're keeping an eye out on today, whether in the Indian market or the global markets. So let's keep an eye out on some of the updates that we're watching out for. So in terms of India, we're watching out for the WPI data that will be there. US also, we do have the CPI data that's coming in. The crude oil data, that's the API data, that is important to watch out for on the basis of how crude oil inventory is moving. Keep an eye out on that one. Other than that, in the UK also, what we're watching out for is the CPI as well as the PPI data over there. So yes, watching out for that. Eurozone GDP data is a key important factor to watch out for. India, yes, we are done with all the Nifty 50 companies. So yes, no more Nifty companies. Today is likely the last day. Maybe only the new listings will be reporting their numbers next week. But a lot of important non-Nifty companies. So keep an eye out on Coastal Corp, EID Parry, Entera Healthcare, Bajaj Healthcare, KNR Constructions, Ola Electric Mobility. So that's supposed to report its numbers today. Keep an eye out on that one. We have Park Hotels, that is AP Jeswant Park, who will be also reporting their numbers. Now moving on to a lot of CM data. That's the one we are watching out for in terms of corporate auto side. CM data, that's important in terms of the industry data that we'll be watching out for the month of July sales. Corporate action, let's keep an eye out on Max Industries, Epigril. Moti is a smaller company, but they will be mulling to consider some fundraising plans. Other than that, we have Industars that will be open as share buyback is to open. Watch out for Saraswati Sari Depot IPO. That is going to be closing for subscription today. So if you want to apply for that, today is going to be the last day for that. So yes, a lot of events to watch out for. Tomorrow Independence Day. So yes, we are all in that holiday mode, but a lot of earnings that we'll be keeping an eye out on.
Absolutely, lots to do before we slip into that holiday tomorrow. But let's talk about the important global stories to track this morning. And let's start by talking about the US PPI, because in what could be the latest sign of easing pressures in the world's largest economy, US PPI growth has slowed more than expected on an annualized basis for the month of July. The Producer Price Index for final demand grew 2.2% annually last month, a fall from a revised 2.7% in June. And on a monthly basis, the figure rose by 0.1% lesser than what the street had expected and below the 0.2% growth seen in June. The report comes a day before the more widely watched consumer price index. That data will be received today US time, and which is this is expected to show inflation staying at 3% on an annual basis in July, unchanged from June's figure. Investors will pass through the data to try and decide whether the Fed will go for a 50 bips or a 25 bips cut in its September meeting.
Okay, meanwhile, the Atlanta Federal Reserve President Raphael Bostic said that recent economic data has made him more confident over the central bank's 2% inflation target, but he wants to see a little more data before he's ready to support lowering interest rates. Additionally, he noted that the balance of risk between inflation and job market are closer to the level, but he wants to be sure that the Fed avoids cutting rates too soon, only to have to raise it later on again if the inflation reaccelerates. Still, if the economy evolves as he expects, rates would be lower by the end of this year.
Well, shifting focus away from macros then, tech giant Google has announced a new artificial intelligence features for Android devices. The move shows how Google aims to put in artificial intelligence in front of consumers before Apple, which will launch its AI on iPhones, Macs and iPads later this year. Remember, the company previously had some AI features in Android, but this is the first year it's heavily emphasizing new capabilities powered by a large AI language model installed on devices.
A lot of updates coming in there from the global world, but on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more domestic updates, more stock updates after this break.
Hi there, still watching Market Cafe on ET now. Let's take a look at how the Asian markets have opened up this morning and holding up pretty well across the screen is what Asia is looking like. Let's take a look at all these individual indices and they've extended gains on this morning after producer prices in the US came lower than expected. First up, let's talk about South Korea. The country's seasonally adjusted unemployment rate sank to 2.5% from 2.8% in July, hitting its lowest point since October 2023. So a positive news flow coming in. South Korea's Kospi was 0.8% higher on open and building onto those gains, almost 1% uptick coming in on Kospi as of now. Shifting focus to Japan, the business sentiment at manufacturers turned slightly less confident in August compared with the month before. This is according to a Reuters Tankan survey. Japan's Nikkei was up 0.6% and well continues to build on those gains as well because 1% uptick coming in for Nikkei as well a 345-point increase on that front. Australia's ASX 200 saw a smaller rise of 0.6% on open, but yet again continues to build gains, 1% uptick coming in for ASX 200 as well. So all of these three indices, Kospi, Nikkei and ASX holding up pretty well. Let's also take a look at what Hang Seng and Shanghai are up to as of now. Hang Seng slightly under pressure, very flat but with a slight negative bias, 8-point cut coming over there, 17,165 is where Hang Seng is. And lastly, let's also take a look at what Shanghai is doing. Shanghai seems to be the underperformer amidst all of its Asian peers because 0.3% cut coming in on Shanghai as well. But let's just focus, talk about how we didn't trade yesterday. We shut at the lowest point of the trading day on the Nifty, 24,139 is where we shut shop, implied at 24,230, indicating almost a 100-point or 100-point uptick coming in on the spot basis. On the futures, a 0.3% uptick is where we're expected to open at today, Vinny.
Okay. And Symphony Limited, a leading player in the cooling solutions market, has unveiled a comprehensive range of new products designed to elevate comfort and lifestyle. The company has introduced a series of innovative coolers, each promising to deliver unmatched cooling performance and energy efficiency. Symphony has also made a significant foray into the water heater segment with the new line of geysers, which boasts advanced features like 9-layer water filtration system and an AI-enabled controller. With this dual launch, Symphony is clearly aiming to strengthen its position as a leader in home comfort solutions. Welcome back. You're watching Market Cafe on ET now, and moving on to some sources information that we're picking up that they're telling your channel that the next GST Council meeting is scheduled for September 9th. The agenda includes rate rationalization across the board. What more is there? Prakash is here, who's filed a report on the same earlier. Listen in.
The next GST Council meeting is scheduled for September 9, where various issues are likely to be discussed. And one of them is mega rate rationalization under GST. However, the formal agenda is yet to be circulated, but there is a possibility that the GST Council will initiate formal discussion on rate rationalization under GST. A GOM has already been constituted by the GST Council on this issue, which has taken a few meetings on this issue, and there is a possibility that the GOM will update GST Council on the progress made, a very significant development coming in. Along with that, the GOM is also examining the proposal of slab merger under GST. So these are the important aspects which are going to be discussed by the GST Council in detail. In addition to that, an important issue which is with regard to GST on insurance premium is also likely to be discussed by the GST Council in the next meeting, as it has become a political issue, and therefore there is a possibility that the GST Council would take up this issue and take some important decision. There is also possibility that the GST rates on insurance premium will be reduced to 5% from existing 18%. But let's see how it pans out, as the formal agenda is yet to be circulated. In addition to that, some issues related to process simplification in order to provide relief to the taxpayers are likely to be taken up. Along with that, some issues related to inverted duty structure, which have already been raised by the industry to the government and the GST Council as well, are also likely to be taken up.
Alright, let's shift focus to another ET Now exclusive. We learned from reliable sources that the government is likely to speed up the strategic sale of NMDC Steel. The government will be looking at completing the transaction in the current financial year itself. Prakash Priyadarshi filed this report earlier. Let's go across and listen in.
Yes, an important development coming in, as we are learning from our sources that the government is likely to speed up the disinvestment process of NMDC Steel Limited. In fact, the government is planning to complete the transactions within current financial year. All the due diligence has been completed, and the government is planning to invite the financial bids in next 2 months. A very significant development coming in. Along with that, we are also given to understand that the DIPAM has identified NMDC Steel Limited under calibrated disinvestment strategy, where the department also believes that the NSL is a fit case under new strategy, as the plant is new, listing has already been done, and it has potential to generate more values for the shareholders. Therefore, the government is planning to speed up the process. As you are aware that the NMDC Steel Limited has assets worth rupees 37,000 crore, and the company has already operationalized 3 million ton steel plant at Nagar in Chhattisgarh. The process was delayed due to election in Chhattisgarh and then the parliamentary elections. Now the elections are over, and the government is planning to speed up the disinvestment process.
Let's move on. And Nykaa reported its numbers last evening. Looking at it, yes, in terms of revenue, we've seen a strong move for the revenue. Margins have seen an expansion with some bit of an impact in terms of the ad spends. Let's go across to Aishwarya to understand more in terms of the numbers, as well as in terms of the recent acquisition where they've increased stake as well. What is the update on that front?
Well, the results of Nykaa's parent FSN E-commerce Ventures Limited are out. Q1 FY25, their net profit that stood at about over 9 crore rupees versus over 3 crore rupees that they clocked in last year, which is a 192% uptake on a year-on-year basis. Revenue that stood at about 1,746 crore rupees versus 1,422 crore rupees, an uptake of about 22% on a year-on-year basis as well there. EBITDA, on the other hand, that stood and they clocked in about 96 crore rupees versus 73.46 crore rupees, which is an uptick of about 30% on a year-on-year basis. Again, so good set of numbers coming in for Q1 FY25 of Nykaa. Apart from that, they made some strategic announcements in terms of acquisitions. 2 companies were announced. One is Dot & Key as well as Earth Rhythm, both of which they acquired a majority stake in. Nykaa already had and owns about 51% of Dot & Key, and they have purchased and acquired an additional 39% from the company. Now their total stands at 90% of Dot & Key. They acquired this additional 39% stake at 265 crore rupees. As far as Earth Rhythm is concerned, the percentage has not been declared, but they said that they have acquired a majority stake in Earth Rhythm as well. And this additional stake will be a combination of primary as well as secondary transactions, following which Earth Rhythm will become a subsidiary of FSN E-commerce Ventures Limited, which is the parent company of Nykaa. So all in all, good set of numbers, and could bode well for Nykaa, these 2 acquisitions going forward.
We'll be keeping an eye out on that. But what are the brokerages saying about the earnings? When we're looking at Investec, what Investec is highlighting, that yes, they have maintained their rating for Nykaa right now. So yes, keeping that rating stable. They've increased the target price by just 2 rupees as of now when you're looking at it. So maintained by 205 rupees as the new target price. They said that the higher margin expansion is something that they're watching out for. The focus is going to be on driving customer growth for Nykaa. So that is going to be key factor, especially in the BPC segment. They're looking to increase more customers, improving the matrices and metrics in fashion. So yes, the internals are improving in the fashion business, which was a smaller business for Nykaa. Now it's becoming bigger. So they want to focus on improving the internals. Margin improvement mainly this time was led by performance that was quite strong, and they expect revenue and EBITDA growth to also see an advance and improvement going forward as well. Moving on, what is JP Morgan highlighting in terms of Nykaa? JP Morgan continues to maintain its underweight rating. The target price that they have given is 138 rupees per share. They said that the beauty segment, surely there was higher marketing spends, which weighed on the margins, because that is what Nykaa has been increasing the ad spend. So that is something that's weighed on the margins. Otherwise, fashion business still was quite muted. Margin expansion is coming through, but they're waiting to improve that. Like even Investec highlighted that they want to improve the metrics for fashion business. That seems like an interesting move coming in there. So yes, keeping an eye out on Nykaa. JP Morgan continues to be underweight on the stock.
Alright, let's keep it going with earnings then. And Nifty 50 major Hero Moto has come out with its Q1 numbers yesterday on a standalone basis. All three matrices, you have metrics like revenue, PAT and margin, all three have come in line with what the street was expecting. Let me deep dive into what the numbers look like. Revenue has come in at 10,144 crore rupees versus 8,767 crores, which is an uptick of 15.7% on a year-on-year basis. Mind you, these are standalone numbers. A net profit has come in at 1,122.6 crores versus 824.7 crores, which is up a healthy 36% year-on-year. EBITDA also has seen an expansion of 21% on a year-on-year basis, coming in at 1,459, roughly 1,460 crore rupees. And EBITDA margin also slight expansion seen on this front, coming at 14.4% versus 13.8%, so up 63 bips on a year-on-year basis. Largely all the numbers are in line with what the street was expecting.
Okay, surely that is a Hero MotoCorp that we are keeping an eye out on. But let's move on and look at Apollo Hospitals. How are the numbers for Apollo Hospitals this time? So yes, when you're looking at it in terms of the numbers that have come in, inline set of numbers overall that one is watching out for from Apollo Hospitals. Overall, revenue seeing a growth of around 15% this time, profits up around 83.2%, while in terms of the EBITDA also we're seeing a growth of 32%, margin seeing an expansion. So revenue in line, PAT slightly below, but margin also overall came in line with the estimates. But what are the brokerages saying about this morning, especially in terms of Apollo as well as Hero? We spoke about the numbers, but let's go across to Varun, who's standing by to tell us what is it from the brokerages. Varun, good morning, and what are the brokerages highlighting for Apollo as well as Hero?
Good morning, Vinny. So let me start with Hero MotoCorp. So brokerages are not much happy with the numbers, and majority of the brokerage houses, if you look at them, they have not changed their targets. Let me start with Jefferies. They are maintaining a buy with a target price of 5650. They say that the results are good, but the EBITDA is a miss. And EBITDA is basically, if you look at margin, they are below the estimates, and a slew of product launches in the pipeline, both EV and ICE categories, they have been an issue. JP Morgan, they are maintaining an overweight with a target price of 5240. The one line that JP Morgan is saying is you can expect some downward revision to consensus forecast based on this results, and they believe that the stock would open weaker than the market today. So this is one line that is a big highlight for JP Morgan. Goldman Sachs, they are maintaining a sell call with 4250. They say that the Q1 is a mess, especially on the EBITDA and the revenue versus Bloomberg consensus, and there is some risk to Hero MotoCorp's volume trajectory going ahead. Apart from this, Apollo Hospitals, if you look, JP Morgan is overweight on the stock with a target price of 6,800. They say that the results were in line, but the average revenue per occupied bed, the growth was only 2.3%, which was far below the estimate, and the Apollo 24/7 GMV grew moderate and the margins declined. That is one concern that they are highlighting. Positively, they are saying that the healthy revenue growth across segment and strong improvement in occupancy, this was one positive that they are highlighting. Citi, they are maintaining a buy call with 7670 target, a healthy inline quarter. This is what they say. Hospital segment saw a good growth, Again, ARPOB, that means the average revenue per occupied bed growth, that was muted, and that is one thing that they are highlighting. UBS, they are maintaining a buy call with 7,500. That's the price target. They say that the well-rounded performance with revenue and EBITDA growing at 15 to 33% in especially the healthcare services is good, but the overall results, if you look, lack a little, and that's the result. That's the reason they have not changed their price target, and they are maintaining a buy with 7,500 as a price target.
All right, Varun, thanks so much for joining us and taking us to what the brokerages are flagging off for both Hero Moto as well as Apollo. Hero mixed notes coming in. Apollo Hospital is looking largely good and positive to the brokerages this morning. But on that note, we'll slip into a short breather on this edition of Market Cafe. More stock-specific news and updates when we return on the other side.
Welcome back, and you're watching Market Cafe on ET now. Yes, there are some new additions that have come in the world of FNO today. But Ansh, what are we watching out for in the FNO snapshot? What are the key levels that you're keeping an eye out on?
Right. Let's start with what FI has did in the previous session. This is very important. They have covered some longs of around 5,000 contracts. They have added over 31,000 shorts. So net to net, we are seeing addition of around 36,000 contracts on downside, due to which the FI total long position has turned a bit negative. Here we are seeing that they have turned net shorts after 38 session, indicating their bearish stance in the market. Now, if you talk about Nifty, then if you can see in the chart, Nifty has been hovering within its consolidation range from last 7 sessions, and this range is around the 24,000 level to 24,400, indicating a neutral stance in the market. Whereas if we check index futures, then we are seeing open interest going down by around 2.5%, indicating short buildup, which is a bit of cautious signal, but we can stay neutral as long as we stay above that 24,000 mark. Whereas on option front, we are seeing call writing happening at a 24,300 mark by over 2 lakh contract, indicating very strong resistance around this level. Whereas on downside, we are seeing some mild put buying happening at 24,100, indicating option traders are expecting Nifty to fall below this 24,100 level. But on downside, we have good psychological support at around 24,000 mark. Now, if we talk about Nifty Bank, then Nifty Bank has also been making a similar pattern to that of Nifty, because it is also consolidating within its range from last 7 sessions, and this range is of around 1,000 points of 49,700 to 50,700 mark, indicating a neutral stance. Currently, it is near that support of this range. Also, we have 100 DMA near that 49,650-600 mark. Now, if we talk about a PCR, this is interesting because PCR of Nifty and Nifty Bank is around 0.5, which is indicating that there's very strong call writing happening. So option traders are getting a bit of bearish, a bit of cautious in the market currently. Now, if we talk about FNO stocks that are in focus, we are seeing significant long build-up happening in Marico and Torrent Pharma, where short build-up for Aarti Industry, Chambal Fertilizer and Vodafone Idea. So keep an eye on the stocks.
All right, Ansh, thanks for taking us through all of those levels to watch out for as well as the stocks in focus. But while we're talking about keeping an eye on stocks, my colleague Ria is joining us this morning with a list of yet another basket of stocks that will be in focus either on the back of their Q1 numbers or their updates. Ria.
Yes, good morning. Let's take a look at the stocks in focus today. First up, we have Hindustan Foods Limited, which has reported a very strong set of earnings in this quarter. The revenue and EBITDA has seen an up move of around 40% over the previous year, and the net profit has also gone up around 16% over the previous year. And they've also seen a slight increase in the EBITDA margin of around 22 basis points versus Q1 of last year. Techno Electric and Engineering has also reported a very strong set of numbers. The revenue has gone up around 37% over the previous year, but the net profit has surged more than 288% versus Q1 of last year. The EBITDA has also gone up almost 148% year on year, and the EBITDA margin has also seen a very strong expansion at 13.9% in this quarter versus 7.7% in Q1 of last year. Allied Blenders and Distillers has also reported a good set of numbers, while the net revenue did go down a bit, around 7% on a year-on-year basis. They reported a net profit of around 11 crore rupees in this quarter versus a loss of around 2.6 crores in Q1 of last year. If you look at the EBITDA, that has also gone up around 44% on a year-on-year basis, and they've also seen an EBITDA margin expansion of around 353 basis points. If you take a look at All Cargo Logistics, though, they have reported quite a weak set of numbers in this quarter. While the revenue did go up around 16% on a year-on-year basis, the net profit has seen a steep decline of around 95% on a year-on-year basis. The EBITDA has also gone down around 4.5%, and they've seen a margin contraction as well of around 77 basis points versus Q1 of last year. Moving on though to Shalby Limited, which has announced a strategic clinical trial agreement with Monogram Technologies. Now this collaboration will focus on conducting a multi-center clinical trial in India to demonstrate the safety and effectiveness of Monogram's TKA system, which is a precision robotic surgical system designed for the orthopedic care segment. And the company believes that the market potential in the US and globally for their system is very significant and could scale up very quickly. Lastly, we have Vedanta, which is in focus after they've approved the sale of up to 11 crore equity shares of Hindustan Zinc by way of an OFS, which represents 2.6% of the equity capital of Hindustan Zinc.
Okay, thank you so much for that update there, Ria. But let's move on. And Ansh, some more highlights coming in from the brokerages. Which are the other stocks that we're keeping an eye out on?
So Max Estate will be the first stock in focus as Investec has initiated a buy rating on the stock with a target price of 700. Currently, the stock is trading at around 583, so they are seeing around 20% on upside here. So according to them, the NCR region is seeing high demand for luxury housing, especially from branded developers. The partnership with companies, company and New York Life is expected to unlock value in company's commercial business. Also, the company is channeling capital into rapidly growing residential segment, which is a very positive sign for the company. Apart from this, Muthoot Finance will also be in focus as Bernstein has come up with a report and they have maintained an outperformance rating with a target price of 2,000 rupees. They observe a growth surge with a sharp rise in credit cost. Also, they note that there's improved operating leverage, which is positive for the stock. JP Morgan has come up with a report on Samvardhana Motherson and they have maintained an overweighting rating and they have raised the target price from 165 to 195 rupees. They see strong momentum across businesses with continued investment in growth. Also, they expect a robust revenue growth with FY24 to FY27 having a CAGR of around 13%. JP Morgan has also come up with a report on Hindalco and we are saying that they have maintained overweight rating with the target price of 725. Currently, the market price is around 620, so they are seeing an upside of around 17-18%. So according to them, India business has delivered an EBITDA beat. Also, 3 upstream projects are planned, which is positive for the stock. Also, this expansion is expected to proceed without harming the company's balance sheet, which is very important. Also, Q2 financial FY25 may see some softer EBITDA per ton due to a decline in LME prices. So keep an eye on the stocks.
Thanks so much for taking us through that. Let's shift away from business news and talk about some other news then. And Paris Olympics double medalist Manu Bhaker has signed a 1.5 crore deal with beverage maker Coca-Cola. The one-year endorsement deal for Thumbs Up Cola has catapulted Manu Bhaker's endorsement fee from 25 lakh per deal to about 1.5 crore now. This is amongst the first and the biggest endorsement deal signed by the shooter after her victory in the Paris Olympics. And well, on to some political news then. The Supreme Court is set to hear CM Arvind Kejriwal's plea today, challenging the Delhi High Court's decision that upheld his arrest by the CBI in a corruption case linked to the alleged excise policy scam. The court will also address a separate plea from Kejriwal seeking bail in the same case. And well, the CBI has taken over the case of the alleged rape and murder of a postgraduate trainee at the Kolkata's RG Kar Medical College and Hospital. A team of officers from Delhi with medical and forensic experts is scheduled to visit the crime scene today. Meanwhile, the Federation of Resident Doctors Association has called off the nationwide strike yesterday following a meeting with the Union Health Minister JP Nadda.
Moving on to some update on the weather front, IMD in its most recent weather forecast has issued a rain warning in multiple states for this week, including Delhi, Himachal and Kerala. It has issued a yellow alert in Delhi for the next 2 days, predicting light to moderate rainfall across the national capital till Thursday. Meanwhile, an orange alert has been issued for Kerala till Thursday. Moving on to the update from the neighbouring country. In her first statement after leaving Bangladesh, former PM Sheikh Hasina has urged the public to observe National Mourning Day on 15th of August. This follows the interim government led by Muhammad Yunus cancelling the public holiday on August 15th. She has also condemned the recent violence and sabotage, calling for those responsible for to be identified and punished.
Alright, on that note, we'll wrap it up on this edition of Market Cafe. But as we bid you goodbye, you stay tuned to the channel because the market takes all the action ahead.
If you like this video, then like, share and subscribe to ET Now.